that, I'd like to introduce Will Monica. He is our broker this year. We're excited to have him join us. And Will, I'm going to turn it over to you.
All right, excellent. And everyone can hear me okay? Just to, if everyone can go on mute that's kind of listening and watching the presentation, that would be helpful. We'll go through this. So this is still here a couple mutes. If you can go on mute, that would be very helpful just for the rest of the listeners. But we're here for the FYI, for your information, open enrollment. April 1st is the effective date. As Nina mentioned earlier, I'm Will Monica with Marsh McLennan Agency. So national broker consultant firm really focused on employee health and benefits, business insurance, as well as just risk management and international benefits. So local in the area, international footprint, but I sit in Tyson's Corner. We also have some locations just around the DMV in Rockville and Bethesda and Columbia. So really excited about the opportunity to work with you guys and the leadership team over at FYI. And we'll make this open enrollment presentation hopefully as painless as possible. Again, I know it's Friday at 11 and everyone wants to be doing this, but hopefully it's useful and there's some valuable information. I would say we can leave some time for questions. I know there's probably some that you don't want to ask in front of the whole group. So if we wanted to tally those up and maybe get them to Nina or a conversation with myself or one of our teammates, we're more than happy to do that. And if you also wanted to maybe pop some stuff in the chat throughout the presentation, we can monitor that as well, just to make sure, we're all aligned and we're not forgetting questions as we go. But Nina, if you want to start, we can. I have the presentation pulled up on my end, but if you want to drive on your end, we can kind of go through some of the highlights here, and then we'll get started. All right. So as Nina mentioned, there's no changes to plan designs or carriers this year. So it should be very familiar with provider directories and just how to interface and interact with the carrier. So we'll go through some of the highlights, some of the value adds that maybe underneath the surface we can start to talk more about and you guys as employees can utilize and really be engaged with. We want to move forward. All right, so just some kind of housekeeping. Your eligible dependents, spouse, domestic partners, you can cover children up to the age of 26. Again, this is the open enrollment period. So I know you guys had received some emails earlier in the week mentioning the new portal and directions on how to sign up. The portal has been opened. So we're going to give you really some time today and then over the weekend, discuss it with spouse, anyone else involved in the decision. And we're really trying to get everything wrapped up, hopefully by the end of next week, middle of the week, so we can submit everything to the carriers. All right. So one of the things just to make you aware of, and again, everyone's probably heard this more as a qualifying event type of scenario, but this is the time. So open enrollment, what we're rolling into now, this is the time where you can make benefit changes unless you have a qualifying event. These are the common qualifying events. And what that means is you would have the opportunity to join a plan, join a spouse's plan, in the event you had one of these kind of life-changing events occur. So just wanted to call that out. This is the time when you're making changes and re-elections, unless you're having a qualifying event somewhere down the road this year, or even throughout this time here. So this is the time to make changes, and happy to kind of roll through what we're going to expect this year. All right, so we're going to review here today. A lot of these slides here. We'll probably move pretty quickly. Like I said, a lot of the information is going to be similar to what you guys were used to. And again, more just some housekeeping rules here that we do want to have an active enrollment. And what that means is we want everyone to go out to the new portal and make the elections, make sure we have the correct demographic information, make sure beneficiaries are all updated. And again, also, if you are waiving coverage, we do want to capture that as well. So definitely go out and read the material. We put together a benefit guide as well, which I believe has been shared with the team. And again, if there's, like I said, if there's any follow-up questions, we're happy to dig into more details on what might be the best fit for me, or here's what I'm thinking this year, and we can help steer it in the right direction. All right, so jumping into the medical plan, if you want to move forward a couple more here. So Care First, you guys are very familiar with them. You know, great carrier in the DMV area, great brand recognition, phenomenal network. So again, this is going to be where you know, you're dealing with a lot of the day-to-day stuff. If you know you're going with the medical benefits as well. So what you want to do here is, if you haven't done this already, I would highly encourage everyone to go on to their website and just create a username and account. If you're new to FYI, this is definitely something I'd want to do to encourage. And again, if this is something you know you've been you know, working with Care First for many years, go out there and kind of get familiar with some of the new stuff they've done on their website and the portal, and just make sure everything is teed up how it has been in the past. All right, so I know insurance can be confusing at times, even for someone who's in the industry on a daily basis, but these are just helpful hints, helpful terms. We'll go through some of the highlights, but again, these are going to be, I would say, kind of the common areas or benefits that most people are going to say, all right, well, I see this on the you know, the front page of the benefit summaries. What does this actually mean? So here's just a quick overview of what you guys would experience, you know, when reviewing the documents. And as Nina mentioned, we did not have any changes this year from Care First. So a lot of these benefits that, you know, directly connect to this insurance terminology has not changed. So hopefully we're going to keep it pretty simple this year, and you know, maybe in years to come we can look at potential updates. But again, this year Care First did treat FYI very well from a renewal perspective, and also FYI did lean in and help offset some of that increase from the employee perspective as well. So as you see here, we have the three plans we're highlighting. We'll again, these are going to be really focused on in-network benefits to start. Majority of these plans do have some out of network, but again, we want to focus on really being in network, especially with Care First in the DMV market. And since you guys have been with this carrier for several years, you've obviously looked at the directory, you've confirmed your providers in, which is the most important thing. If anyone has experience out of network claims, they can take a little while. There's opportunities for balance billing. So we certainly want to strive to stay in network. So option one here, and we'll go through these. Like I said, these have not changed. The increase or the deductible amount here on the HMO HSA, which is option one, is $1,600 and $3,200. This is an 80% plan. So the plan pays 80%, employee pays 20%, and then out of pocket, $4,500 and $7,900. Important thing to call out here on all these plans: preventive services are covered 100%. So routine physicals, well woman visits, immunizations for children. This is areas where we want to encourage, carriers want to encourage preventive services. So definitely when you're in your PCP or working with your doctor, you do want to, most doctors now understand that there's a lot of preventive services that can help mitigate potential large issues down the road. So definitely be asking them about things that are covered in the preventive services realm if that's of interest to you guys. For primary care on the HMO, is if you're familiar with this, you obviously know with the HSA and the high deductible plans, you do need to satisfy a deductible before your benefits kick in. And what does that mean? So in this scenario for primary care, you are subject to the deductible first, and then it's a $20 copay after you've satisfied your deductible. The specialist visits follows that same theme. So it's a deductible and then copay. So for those of you who may not be familiar with an HSA or a high deductible plan, you really do have to satisfy that deductible, whether it's $1,600 or $3,200 for family. And then once that is satisfied, you kick into copays. The virtual care, and we'll get more into this throughout the we'll get more into this throughout the presentation, but close-knit is Care First's Virtual Connect and mental health support. So certainly want to be looking at that. That's been something that really has been on the forefront of kind of communications and care. Certainly over the last 3 or 4 years, this has become something that most plans you're seeing high utilization out of this. Just with obviously virtual care has really grown and skyrocketed through the roof, but also more resources around mental health support is another thing that Care First has really built out resources. As you can see here, urgent care, emergency room, inpatient, hospital, and outpatient follows the same theme as the high deductible. You'll have to satisfy that $1,600 deductible, and then your benefits kick in at the 20%. So you're on this plan, you'll see that the co-pays as well as the co-insurance would contribute to your out-of-pocket maximum. So if you're an employee only, you have a $1,600 deductible. If you're going to the provider, you're getting medication, all of that is subject to the deductible. Once you hit that, you do kick into your co-insurance, and then that is how you'd get to your out-of-pocket maximum. Similarly, option 2, you'll see here, this is a slightly higher deductible amount, so $2,500 and $5,000. This is 100% plan co-insurance. And then you'll see here the primary care, we've set this up so there's a deductible in front, and then there's no charge for PCP. And then you'll see also with the specialist, we've got that slightly lower. So again, in terms of a little bit of a higher deductible, but some richer co-pays after you've satisfied deductible, that's the Blue Choice Advantage plan. One thing to call out around the Blue Choice Advantage versus the Blue Choice HMO is this Blue Choice Advantage will give you more of the feel of a national network. So the way that Care First is set up is that this plan, as you know, can be deep discounts, a lot of value locally, but Blue Choice Advantage also gives you coverage outside of the Care First service area, which again, you guys have been with Care First for several years, so you understand that they're in this unique area, the DMV. You do kind of straddle Maryland, DC, and Virginia in a lot of cases. So their ability to have a network for folks who are traveling potentially out of the service area, you're more than covered with options 2 here and options 3 with the Blue Choice Advantage network. Moving on to the $1,000 plan, so option 3, this is what we would kind of consider more of the I'd say the richer option when it comes to lower deductible, very low co-insurance. It's 100% covered. And again, you'll see here the deductible is at $1,000, $2,000, and the out-of-pocket max slightly higher. But again, what you're looking at here is the ability to have that upfront care without having to satisfy that deductible out of the gate. So that is the biggest difference between option 3 and the other options 1 and 2 that I've discussed. I always call these plans first dollar coverage. So what I mean by that is you could go to the primary care, you could go to the urgent care, providers for specialists, and right out of the gate, you would be able to pay co-pays for those services. So again, that's a little bit of a sticker shock and a difference from folks who may be used to more of a first dollar copay driven plan rather than a high deductible plan. So there is a good spread of different options and, I'd say different levels of deductibles that, folks can work through and really kind of plan out their care for what would be the best plan for them moving forward. All right, Nina, if you want to go to the next slide. So the prescription drug, again, falls under Care First as well. So the first 2 options here, option 1 and 2, again, the high deductible HSA plans. As you can see here, the biggest difference is they're combined with medical. So as an example, if you go to CVS and you're getting a preferred drug, and this is the first time you're using the plan, say you go in May, you would be subject to that deductible. So depending on what the discounted rate of that medication is, that's what you would pay, and that would go toward your deductible. Once you satisfy the deductible, whether that's on the 2,500 plan or the 1,600 plan, after that, that's where you'll see the copays kick in. So furthermore, if you go to option 3, that's where you'll see the big difference in these 2 plans. This is a non-combined medical pharmacy. So going off of the theme of first dollar coverage, in that same scenario, if I was taking a tier 2 or tier 3 drug, I would go right into the copays out of the gate, and you would not have to be subject to any deductible. So certainly a little bit of a difference there in the plans, but for folks who are used to the HSA, that's an area where you can shelter money away. There's tax advantages to it, and then you can also utilize those funds to pay for medical expenses. So I really think of HSAs as kind of a healthcare 401k. You can utilize that to put money away. It can grow, and also you can utilize it for future healthcare expenses. All right, next slide, please. All right, so here's a breakdown of the medical, per pay deductions. I won't go through each one, but this was also included in the guide. So as you can see here, option 1, as we mentioned, is going to be the higher deductible plan, the HMO HSA, which is the 1650 plan. Option 2 is going to be, again, a Blue Choice Advantage HSA option 5, which is the 2500 plan. And then option 3 is going to be more your first dollar coverage. It's not a high deductible plan, it's $1,000 deductible. So you're going to be more of a first dollar copay scenario. So definitely review those, and I believe those were also in the benefit guide as well. So certainly review those as you're making your decisions later on this week or this weekend. Next slide, please. All right. And always like to mention this. How do you guys maximize your healthcare dollars? Where's the best place to go? There's a lot of discussion, just around, what's the most expensive place to receive care? Well, that's the emergency room and in the hospital. I know there's a tendency when it feels like an emergency or feels like something is really going wrong that you have to get immediately to the emergency room. Just be familiar with where your urgent cares are. There's a lot of them kind of around our Beltway and DMV area for you local folks. For people who are maybe out of the area, I would certainly just be familiar with where the closest urgent care is, especially if you're on the high deductible plans. For anyone who's been to the emergency room, it can take hours to get seen, and you're certainly walking out of there typically hitting your deductible for the services. So certainly not saying if it's an emergency, don't go to the ER, but if it's something where maybe it's a broken finger or a sprained ankle or something that maybe can wait for an urgent care, or there's an option, just be aware of where they are, because again, there's going to be time will come back in your favor. It's going to be much lower cost for out of pocket. And a lot of the same things that an emergency room can do can be facilitated through an urgent care as well. So just wanted to call that out and just make sure everyone's aware of some of the ways to maximize the plan dollars. All right. Making the most out of your plan. So again, these, we'll go kind of quickly through these, but again, this is just more highlights of the Care First portal and how you guys can go on as employees and really look through whether it's searching for doctors, urgent care facilities, checking your claim status, seeing if a provider's in network. There's also some ability to go in and look at different medications you might be taking and see where they fall on their formulary, but also if there's any generic equivalents. And if there's an area where if you're on that high deductible, you might want to look at a generic if your preferred or non-preferred drug is a little more than what you wanted it to be, and it's now hitting your deductible. There's obviously, an opportunity now to look at Care First formulary and see if there's any generic equivalents. And if you want to go, I think a couple more slides. We talked about the provider search tool, the treatment cost estimator. So anyone who has, a planned surgery, or they're thinking about getting, surgeries done, this is where you would go in and just, we're always shopping around for, I would say, everything we buy. So why wouldn't we be shopping around for the best cost and treatment that we can get? Care First will have this where they're going to put the top providers at the top, where cost and quality is the best. So you want to balance the two. But again, sometimes people make their decisions off where's the affordable place for me to go. So they understand that there's a need for that. And I think there's a lot of value in just having all that information available. So certainly go out, and if there is a procedure or something that you know you have planned this year, it's worth shopping around and seeing where there's a difference in, the MRI facility at the hospital versus the freestanding facility a mile down the road. Could be significant difference. All right, if we want to move to accessing care, as I mentioned, close knit. This is a virtual connect that's included with all the plans. So you pay $0 virtual urgent care and mental health through close knit. We've provided some information in the benefits guide around this as well. But this has been great. A lot of our clients have really leaned into this. And, as I think we've all experienced over the last 4 to 5 years, time is valuable. You're not always going to be face to face with people. And so having this different mode and medium of connection, a lot of advances has come in the virtual care world as well. So if you want to go to the next slide, it even talks more about some of the other areas that close knit can help provide support. And so this is not new from Care First, but I feel like they're really trying to shine some light on it over the last several years, as we all know as to why. So this is starting to pick up. There's a ton of resources here, and definitely want to lean in and explore that more if this is something that you feel could be valuable to you. All right, the member ID card, you guys are familiar with being with Care First for several years. So again, this is just a snapshot of what that card would look like. You would be getting new cards as well. So just wanted to call that out. All right, Care First Wellbeing. Again, this is something that we'll really work with not only the leadership at FYI, but there's also some rewards in some areas that you as employees can get engaged with Care First. So a lot of this is going to be done digital. A lot of this is going to be done on the portal, the account, with Care First. So that's why I encourage everyone, if you haven't gone out there and at least signed up and looked at it and maybe taken a personalized, health exam, looking at some of the other kind of surveys and health profiles that they offer, there's a lot of, I would say, resources and value that you can get just by kind of taking a little bit of a deeper dive into your own health and the own status. The other thing is with the Blue Rewards, this is a program that there's basically steps that you can get free money, and who doesn't love that, especially when it's focused on your overall health. So it could be taking a real age risk assessment. It could be selecting a primary care. All of these will flow through. If you hit your healthy rewards, it would be available online. It's called the Blue Rewards program. So for those folks who have completed this in the past, you've probably seen this on your Care First membership account. For those, this might be new. Certainly go out and take a look at it. I think, everyone likes when they receive $100. I think we can utilize that in a positive way and certainly get some more engagement around just being a little more vigilant around your overall health. And this, in my mind, is more kind of that proactive upfront care. It's not, hey, we're already in a sickness state or we're already having issues. This is what I would call early identification. And the identification might be, hey, everything is great and we're tracking well, or hey, there's some things that we might need to focus on, and then we can work through what that might look like with Care First. All right, well, so switching gears, we'll move into the dental plan. So Sun Life, you guys this is the second year with Sun Life. Again, no benefit changes were made. And as you can see here, the calendar year deductible is set at 25 and 75. The calendar year maximum, so the maximum that they would pay out, 1,500. And if you look here, the preventive services, basic services, and major and orthodontia. So very common setup. It's 100% for your preventive care. Basic is 80% after the deductible. So there's 25 if you're individual, 75 for family. And then your major, which would include kind of a lot of the stuff that probably not many people enjoy, that would be 50% after the deductible. And then you guys do cover orthodontia for both adults and children up to age 26. So again, rich benefit there. Sometimes you'll see that at just up to age 19. But again, up to 26, and you have a lifetime maximum of 1,500, which again, those are separate. So there's a calendar year benefit max of 1,500 and then an orthodontia max. All right. This is just a quick breakdown of the employee per pay. Again, this is a voluntary benefits option. So for those of you who are interested in this plan, this would be the per pay from the employee side. All right, and how to find a dentist. Very similar to the Care First look and feel. You want to go on, create a username and password. Sun Life is a huge partner for MMA just across the country. Excellent service. The network is phenomenal. And as you know, anyone who's dealing with dentists and practitioners, sometimes, you need to find out if your provider or your dentist is in network. A lot of these plans are set up so it's passive. So it's kind of the same benefit in and out of network. It's just very important, I would say, as a consumer, as your provider relationship, that you confirm whether they're in or out of network. I would say that dentists are probably the one area where people do, they don't want to move their dentist. So you do see in the way they've designed these plans a lot, they give you out of network options. So because they understand that changing your dentist is usually the one thing you never want to change. So just be familiar with that. If this is a new plan for you, you can go on and see what the network looks like in your local area for Sun Life, and you can go check a dentist or a provider out through their website as well. This is again just a highlight of the accessing your dental card and how to go about that. The next slide here talks about the mobile app. I think everyone now is digitally connected. I don't think we go anywhere without our phone. I can't tell you how many times I've gone to a provider's office and I didn't have my, actual hard copy ID, but I did have the app. And so a lot of the times you can pull that up. You can download your card. You can scan it or send it directly to the office. So you're never not without confirmation of coverage. So definitely want to just highlight, if you haven't utilized that plan or downloaded it, it gives you a lot of extra resources, claim status, view your plan. If this is, like I said, if this is a new option, you can help find a dentist near you, and it just makes it very quick, easy, and intuitive to work with. All right, moving on to the vision plan. Again, with Sun Life, similar plan to the previous years. We did not make any changes. So again, very low $10 exam frames. We have an allowance, 150 for your frames, 80 allowance at Costco. Lenses, which are single, bifocal, trifocal, $25 for copay, and then you also have elective lenses for $60 for contacts. This is the one thing to be important. The frequency is 12, 12, 12. So what that means is you can kind of go for one of these every year. So sometimes you see plans set up with a 12, 24. This does offer you a 12, 12, 12. So exams, one exam every 12 months, frames once every 12 months, and then lenses or contacts, which again, this is a similar setup with no changes from the previous year. Quick breakdown of the per pay deductions. Again, this is a voluntary vision option as well. And so here are the breakdown for the employee per pay deductions. All right, finding a vision provider. It's going to be very similar to how you're working through the Sun Life Dental. VSP is the network. They're the largest network for vision. Most of the carriers, whether they're a pure vision carrier or even a medical carrier, the VSP network is usually what they're tapping into. So it's the largest national network. Shouldn't have any issues finding providers. And again, in the event there is an out-of-network provider, we can help facilitate instructions or just the ability to find someone who is in network. All right, we'll move forward just to the life and disability section. Again, no changes here. We are with the Hartford moving forward again. And we'll see here there's a one time your basic annual earnings to a maximum of 50,000. And again, life insurance, one thing just to call out, especially since we're in open enrollment, make sure that beneficiaries are updated this year when you go in and you're enrolling. Even if things are not changing, I would just make sure that you do have the correct identifications in there, and making sure that there's no issues. Obviously, this is something you don't want to be utilizing, but again, we want to make sure that everything's updated in the event something does happen. And just to call out, this is an employer paid benefit. So anyone through FYI, if you are enrolling, this is a benefit that your company covers for you. All right, disability insurance, again, with the Hartford, no changes here. This is a voluntary plan. So again, as an employee, we have the calculation in which you guys are used to because you've had this option for several years. We have the calculation on how to get to the kind of that per pay breakdown in the benefits guide. And again, the disability or short-term disability really is there for you if you're disabled from a non-work related injury or sickness. And the disability income is provided just as a source of income. So again, voluntary benefit, employee paid. The percentage of income replaced is 60% up to a maximum of 2,500. The benefits begin on that 15th day for both injury and sickness, and the benefits duration is up to 11 weeks. All right, moving on to supplemental health. So this is an area, again, these are all voluntary benefits, and they're offered once again through the Hartford. For those of you who this might be new to, I'm a big fan of supplemental health benefits. I think if you look at accident and critical illness and hospital indemnity, there's certainly a swing and probably the cost of an accident plan, as we'll see on the next slide, can be very low, and also it helps cover you in the instance throughout this year that you suffer an accident, and the benefits through the medical plan may leave you with an out-of-pocket exposure. Accident plans are great to have in the event that you have this out-of-pocket that you need to help pay that the benefits don't cover. So as you can see, the breakdown here, this is, again, a voluntary benefit. And I always like to at least position these as there are most of these plans for supplemental health voluntary benefits have what you see here, these wellness benefits. So if you can go on to the Hartford and complete a wellness benefit, which is usually getting a physical from your provider, you get $100 that Hartford will send you, which if you're an employee only and you're joining this plan, practically pays for the benefit. So this would be one of the things I would certainly be looking at if you are interested in the accident plan, or maybe you were on it previously and this was something that you weren't aware of. We definitely want to call out that this is a benefit that if done properly and you check the box on the wellness exam, you essentially would be getting this benefit paid for by the carrier for doing the right things. So certainly want to just highlight this. We're seeing almost every group really make a push to get more supplemental health benefits in the hands of their employees. Obviously, it's a voluntary benefit, as I mentioned, and but I think there's just a lot of good things that can come out of this in the event that you are stuck with an out of pocket that the plan may not completely fully cover. All right, moving into critical illness. Again, through the Hartford, and again, the critical illness insurance, it covers this isn't all encompassing. The list is here, but we put probably the top 4 or 5 that we will see. Again, as you see, again, there's another wellness benefit that helps cover this. You can choose the benefit amount that's right to you. So there's different levels. So 5,000, 10,000, 15, or even 20. This is where, again, if if there's a family history or this is something that is within your population, you've probably already enrolled in this benefit. But again, if this is new, definitely take a look at it. It's going to be more based on it's age banded. So again, you want to make sure we're looking at what the premium would be for you as an individual, given the different levels that you would buy. So as an example, if you were on this plan and you selected $10,000 and you were dealing with, kidney failure or heart attack, you would get a $10,000 check from Hartford if you were enrolled in the critical illness plan. So again, you can also have it for spouse. You could also include your children under the benefit. But again, it's worth calling out the rates do vary by employee based on your age and the benefit amount elected. All right, hospital indemnity. Hospital indemnity insurance helps you cover the cost of going to the hospital, which we understand that is going to be one of the most expensive places to receive care, but also we know that it's not always you don't always have a choice. So we want to make sure that there's voluntary plans in place if you know there's a planned surgery or something that within this year that you're going to be confined. This would be an area that I would look at this plan. We also do have, I didn't put it on this slide, but there's also a wellness benefit of $50 included in this plan. So certainly, if this is an area where throughout this year there might be an opportunity for a confinement, you want to be looking at this as a benefit that's offered through the Hartford to enroll. All right, the tax advantaged accounts. So we'll go through here again. None of these options change. So should be familiar platform. Accounts should still all be open and available. The health savings account is through Voya. Again, so this attaches to your HSA as a tax advantage account. You can put money into. You can save for future expenses. I've been on an HSA, my entire 15 years. And you can have multiple of them. And I think it's just a great way to, one, you become a little bit different of a consumer of healthcare because you do, in these instances, there's a high deductible that's always attached to the health savings account. But you also have the ability to have that triple tax savings. So you can put it in tax-free, it grows, and then you can take it out tax-free. So there's a lot of advantages, and it's really the only mechanism out there that gives you that kind of triple tax advantage. So just to call it out here, the contribution limits have increased for 2025. Every year they increase them slightly. So it's usually $50 or $100 every year. It's $4,300 you can put away as individuals, $8,550 for family. If you're at a certain age, 55 plus, you have what they call a catch up. So you can add an additional 1,000. So this is if you're new to FYI, or maybe you're on a different plan and you're looking or interested in an HSA, we do have a little bit of a breakout, I think, on the next slide, which shows, kind of a scenario of how an HSA can help save you money. But just, kind of from a personal experience, I've seen this where you can set your amount at the beginning of the year. It's taken out per pay, and you don't have to use it in that year. It can grow. Also, it's portable, so it's your money, it's your bank account. In the event you're transitioning or leaving, this is yours. So it's different than like a health reimbursement account where that's more employer dollars that are being put up. This is an HSA where health savings account where it is you as the employee that is really benefiting from sheltering the money away and then using it as you see fit for care down the road. All right, the FSA, again, through Voya, we have three options. So the healthcare FSA allows employees who are not enrolled in the HDHP or HSA plan. So for the HMO HSA and then the 2500 Blue Choice Advantage, you are not able to enroll in the healthcare FSA because it would give you basically two options to be putting funds away. So the healthcare FSA is really going to be the option for the $1,000 Blue Choice Advantage 3 option. The limited purpose FSA does allow employees participating in the high deductible plans to pay for certain approved medical care with the pre-tax dollars. So just be aware that is the difference between the two. You cannot be enrolled in the healthcare FSA as well as the high deductible plans that you guys are offering. Dependent care allows employees to use pre-tax dollars for dependent care for children under the age of 13. For those of you who have children and live in this area, and you know the cost of daycare and nanny and expenses around that, you do have it up to $5,000. So any advantage that you can get and help pay some of that, or at least put it away, definitely be looking at the dependent care FSA. Again, it is a use it or lose it. There is no opportunity to roll over these funds. And again, for most of us, the dependent care, that's, you understand that that's 1 year. I do see sometimes on the healthcare FSA, folks get to the end of the year or the plan year and they forget that they have all these funds, or they forget that it's a use it or lose it. So one thing to call out, employees may roll over up to $500 to the next plan year. So that's on the healthcare FSA and the limited purpose. The dependent care is a true kind of, you set it at that beginning of the year, and it needs to be used throughout that calendar year. All right, qualified expenses. Again, these are all available. The IRS determines, which medical and dependent care expenses qualify for both the FSA and the HSA. These are going to be kind of the common ones. I would say the dependent care, we'll probably all have dealt with this or in the process of dealing with this. The limited purpose FSA, you could utilize this to help offset some of the Sun Life, dental, and vision. And then the healthcare FSA or the HSA, again, you could pay doctor's fees, you could help over-the-counter medications. Even for me personally, just swiped my HSA at the chiropractor yesterday. So you can be creative with it. You don't have to use it. So putting it away does not mean that you have to use it in this year if you're under the HSA plan. But just be aware that this is a different tool to help, I think, uncover a little bit of the consumer side of the benefits, but also if you're savvy enough with putting money away, there's a lot of tax advantages to this as well. Okay, getting into the pet insurance, and these are available to you guys on a voluntary basis as well. These are not, these have been in place for several years. So, the best pet health insurance, you have Pet Assure, vet discounts, as well as Pet Plus. So, if you're interested in these coverages, they'll be, certainly select them, when you go to the portal later this week or this weekend. And again, there should be no changes with how you're operating with the pet insurance benefit. All right, and the commuter benefits for those of us who are commuting or have eligible expenses. Again, we have 2025. The monthly contributions limits for parking are $325, as well as if you're you're making your way in through different transit modems as well. So $325 for both per month. And again, this is also offered through Voya. So no changes with the setup or with the the portal that you'll be working through. All right. So Nina, I didn't know if you wanted to jump in here and talk maybe some high level around GovCon Pay and just some things. I know this is a wordy document, but kind of wanted to you maybe set the stage for how to access it. I'm certainly sometimes a lot of these, the wizards or whatever can help prompt you along the way, but just want to kind of have you shine some light on this.
Thank you very much, Will. So, all of you should have received your email from GovCon Pay, welcoming you to the open enrollment. And then also in the email that I sent at the beginning of the week that did have the benefits guide that Will mentioned, there was also a link in there with a very brief video of how you access the auto enrollment wizard in GovCon Pay. It's very easy. I know a lot of you have actually already been in there. Please do take a few minutes to go in and use the platform. We would like everyone to go in and re-elect their plans. And you must re-elect plans for FSA and commuter. Those will not automatically carry over. So really, everyone needs to be going into the platform to enroll or opt out of your benefits. If you have any questions, of course, please reach out to me and let me know. I know some of you have already reached out with access issues, and I think we've gotten them all resolved. But again, if you reference the email that I sent at the beginning of the week, there is a link that gives you a real brief tour of how to access the auto enrollment wizard, as well as the email that came directly from GovCon Pay. And so with that, we can open it up for any questions. I'm going to go ahead and stop sharing.
I know there were a couple in the chat that I can get to. Let me see here. And so just to call out, I believe, so individual and family deductibles. So just kind of going back, all of these plans are set up what we would call an embedded deductible. So the combination of the family can meet the, so for instance, the Blue Choice Advantage option 2 is a 2,500 deductible for individual, 5,000 for family. So obviously, as an individual, if you're employee only, you're meeting that 2,500. As a family, you have an embedded deductible, so you could have once one individual meets the 2,500, if you're part of the family, you've satisfied your portion of the 5,000 for family. So you can kind of meet it through a combination of family members on the individual and family deductibles. The next question was around, so if you're out of state, potentially New Jersey, some other areas out of the DMV network, what would be the best option for you to join? So again, these plans, the Blue Choice HMO, it's an open access plan. So it does give you benefits outside of, it gives you kind of the features of an HMO, but it doesn't require, referrals. So there's a difference there. However, that Blue Choice HMO does not offer out-of-network benefits. That doesn't say that the provider's not going to be in network, but again, you have to be, especially if you're out of the service area for Care First, you want to make sure that you're looking at the Blue Choice Advantage plans because that does give you out-of-network, and it also gives you the extra layer of protection if you're out of their service area, i.e. New Jersey, or out of DC, Maryland, and Virginia, that you have coverage and you can access what they call their Blue Card, which is their national PPO platform. So to answer the question, I would be looking more at options 1 and option, oh no, not option 2 and option 3 as if you're out of area. The drug list, I'll see Care First should have a formulary available. I do think that a lot of those will be available on the portal as well. Those formularies tend to change a lot.
Yeah, I
But we
don't
can,
think that there's a document that we can email. I think you're best served by, as Will mentioned in the presentation, creating your online account access in the Care First site. And then they do have a tool online that allows you to search drugs and gives you the breakdown of the costs as well as if there's generic available. So again, that you really want to access from the Care First resources on their website.
there was a question around how do we know which plans are eligible for HSA? So option 1 is the 1600 plan That would be an HSA. The level for an HSA is, well, it's 1650. I apologize, that should be updated. But so 1650 is the level that you have to set your deductible for it to be considered a high deductible option. So the only plan here that would not have an HSA or be HSA eligible would be the $1,000 plan. So the 2,500 and the 1650 plan would be what you would show as the HSA. I believe in the documents and the benefits guide, we call out right near it, even in the plan name, that it's it's HSA compatible.
Correct. And it's options 1 and option 2 are the HSA compatible plans. And that's why the name does contain HSA in the name of the plan.
And there was a question around deductible carryover each year. I believe this is probably pertaining to medical. So it does not carry over each year. So with your guys' option, these plans are what they would call on a contract year or plan year. So your deductibles start over and quote unquote reset 4/1. So you run April 1st and your deductibles and out-of-pockets can accumulate all the way up and essentially until March 31st. So it does not roll over. If you met, $1,000 of your $2,500 deductible and it was, it's today, that portion does not roll over to 4/1. It would essentially starts over. So that's just worth calling out. It does not roll over on the medical. Let's see
There
if there's
was
any more
one other
questions.
question, Will, about contact lenses and glasses in the same year.
Yeah, so if again you can. I mean, the way that the benefit is set up is that you have the 12-12-12 frequency, so you're able to get the lenses, the frames, and the contacts once every 12 months. Yes. Let's see, there might have been another question that popped in here too. And Nina, as things come in, if there are questions that don't want to be asked in the chat or kind of more personal stuff, I'm happy to, collect those and then you and I can huddle up and how to do that.
Yep, absolutely. If anyone does have any questions that they would prefer to ask in private, just send me an email or give me a call and we can get those answered for you. Okay, are there any other questions?
Will the slide deck be available?
I was just, yep, Carol, you took the words right out of my mouth. I'm going to post the recording and the slides on my FYI. So you will have access to the slides, exactly.
Thank you.
I have a question, Nina. Can you hear me?
Yes, ma'am.
Yes, for the parking and commuting, is that price going to increase now that we're going to 5 days a week with the company match?
We are looking into some options, Vanetta. We'll have information out soon, but we're looking into some options.
I have a question.
Mhm.
Now I forgot it.
What was that question? I'm sorry.
It's the recording. I for some reason I cannot access the recording, and I know Anissa's not here today, but I know she says that she can't access the recording either. So, are we doing something wrong? Should we be calling IT?
I'll try to answer that offline, Erica. It's all posted in my FYI, which is our intranet, and the easiest way for you to access that is through the My Apps portal in Microsoft because we have an auto link there.
Okay.
But we'll touch base offline about that.
Okay, thank you.
Somebody,
I didn't hear the question before that last one.
Vanetta asked, I believe she was asking if the employer contribution was going to change for commuter benefits now that some of our contracts are going on site 5 days a week. I do not have an answer yet. We're looking into some options. So we will communicate on that once we have made some determinations.
Thank you.
I can say that we are looking to make adjustments for people that have to go on site 5 days a week. I just don't have the final details yet, so I will get that out as soon as I have some information. Right. Deborah, I will touch base with you separately to answer some of your questions.
Thank you.
With that, if there's no additional questions, thank you all for joining. We will get the slides and the recording posted hopefully by the end of today. If not by the end of today, then by Monday morning, we'll have those posted up. If you have any additional questions, please just email me or give me a call. Will, thank you so much. Appreciate your help today. And thank you, everyone. Have a great rest of your day and a great weekend.
You too.
Yes. Thank you,
Thank
guys.
you.
Right. Bye-bye.